The demise of Google and Alphabet have been predicted for a couple of years now since ChatGPT was released, but the company continues to grow revenue, continues to perform extremely well. That said, the stock is down 7%, at least after hours, after fourth quarter results were released on Tuesday. We'll see where things open up on Wednesday. By the time this is published, you'll probably know what the open is on Wednesday, but I think the results look pretty good, especially if you take a step back and actually think about where this business is sitting today. Artificial intelligence is an area where Alphabet, Google Cloud are really leaders in the market. They don't really get credit for that, but they do have one of the biggest AI businesses today. They were actually supply constrained. That's the reason that the GCP business only grew at 31%. That was really the thing that the market seems to be disappointed by, is it didn't grow even faster. Guess what? A 30% growth business is a phenomenal growth business. If that business grows from $43 billion in revenue today for 30% for the next decade, this would be a $600 billion business. So just keep that in mind when you're looking at some of these numbers. When the market overreacts to a company missing a growth target like 33% by a couple of percentage points, usually not a big deal long term, usually a buying opportunity. But let's go through the numbers. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on Alphabet's YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's get right into the report. And this is the fourth quarter results. I do want to note that Alphabet doesn't actually break down a bunch of their businesses. They give something like YouTube, they give the advertising numbers, but don't give kind of the full breakdown. So we'll do our best to kind of understand exactly what's going on. But overall, consolidated revenue up 12% year over year to $96.5 billion. This is a little bit of a slowdown from the third quarter. This is last quarter's results, which increased 15% or 16% in a constant currency basis. Google services revenue increased 10% to $84.1 billion. I'll go through what that includes. And then Google Cloud, this was the big one, increased 30% to $12 billion in the quarter. They were supply constrained, so it seems like they did have more demand than they could actually meet. But there was also operating leverage in the business. Keep this in mind because Alphabet and Google getting more profitable as they get bigger. Operating income increased 31%. Operating margin expanded by 5% to 32% in the quarter. Net income up 28% and earnings per share up 31%. So all of these things moving in the right direction. For a company at this scale, these are really, really impressive numbers. So here's where we get to some of the breakout into what's actually going on in the business. Google Search and Other up 12.5% to $54 billion. This is where you may hear the narrative that something like ChatGPT or Perplexity is going to take Google Search. Doesn't really seem like that's happening. YouTube ads was up, maybe not a huge number, but that continues to rise. $10.5 billion in revenue. And the Google Network, this is the little snippets that you can have with Google ads in them all over the internet. Much more popular a decade or two ago. So this has been declining as a business, but this is actually where a big chunk of this traffic acquisition costs come from. So no surprise, this is a long-term trend that people are doing more with search and less with the Google network. But overall, you see this revenue from Google advertising grows to $72.5 billion. Subscription platform and devices, this is going to be where things like Android, the Pixel phone, the subscriptions that we pay for email, for cloud services, all of that is going to fall into this. That was up 8% to $11.6 billion. But the big one is Google Cloud. This was up 30% to $11.96 billion. I'll get to the profitability. They actually don't break out the profitability or the operating income from each of these segments. They just give you the services total. So keep that in mind. Also, you can take out total traffic acquisition costs. That's for the payments that they pay to websites that are their partners, also paid to Apple. That's another big piece of that. And here's that operating income number. You can see huge increase in the operating leverage for Google services. That's where you get a 23% increase in operating income. Google Cloud up over 100%. That's not a huge surprise because they're just ramping to profitability with this business. And then other bets continuing to lose money, not a big surprise, but you have Waymo in there and a whole bunch of other businesses. In total, operating income increased from $23.7 billion to $31 billion in the quarter. Cash and equivalents was actually down to $95.7 billion. That's in large part because they had a huge increase in CapEx. And you can see that here within the statement of cash flows, $52.5 billion worth of purchase of property, plant, and equipment. That was up from $32.3 billion. These are annual numbers. And then the quarterly numbers, they go up to $14.3 billion. So your run rate is getting a little bit closer to $60 billion. They actually said that their CapEx is going to be $75 billion in 2025. Also bought back $15.6 billion worth of stock in the quarter and $62.2 billion for the full year. So buying back stock at a pretty rapid rate. That's resulted at least in a modest decrease in the share count. They do have stock-based compensation. That is going to be a diluting factor. But Alphabet is at least reducing that share count even as they grow the business and they grow cash flow from operations. But the big number everybody's going to be talking about on Wednesday is going to be this CapEx number, $75 billion in total capital expenditures. The only company that really comes close to that is Microsoft is going to spend $80 billion this fiscal year. They actually peaked that spending, it seems like, in the fourth quarter of 2024. Their fiscal year is about 6 months offset. So the next couple of quarters are actually going to be pulling back just a little bit. Meta is not spending this much. So this is the one company that seems like they're still supply constrained, still spending a ton of money on capital expenditures. We can read into that 100 different ways, but I think this is what this is telling you is that Alphabet is really confident in what they're doing in search, what they're doing in YouTube, and what they're doing with artificial intelligence with both Gemini and their models, but also what they're launching for their customers in GCP. So it seems like all of these things are moving in the right direction. The market may not be seeing it that way, but I think if you take a long-term view and you go, what is this company going to look like? What is the business, especially for AI and CapEx returns, going to look like a decade from now? Things seem to be pointing in the right direction, and the stock is a pretty reasonable valuation too. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So you can quibble with some of the numbers here and there, but I think at the end of the day, most of the businesses that Alphabet's involved in are moving in the right direction. Search continues to grow at double digits. You're seeing a lot of momentum on YouTube. I don't see anybody disrupting that business anytime soon. Google Cloud continues to grow. 30% is a phenomenal growth rate. And then you have businesses that are probably underappreciated, like Waymo. That's potentially a $1 trillion business a decade from now, just hiding there on the balance sheet. And as I'm recording, the valuation still looks pretty reasonable on a trailing basis. It's about 27, forward basis is about 24. That's before the potential drop in the stock that may happen on Wednesday based on after hours trading after earnings were released. So I think you add all of this up, this is still one of the most reasonably priced big tech companies in the world today. They continue to buy back stock and return that cash to shareholders. If that growth that they have in their CapEx really starts to pay off and they start to build a moat around that artificial intelligence business, I think that growth could continue to pick up. But this is, I think, just a great play and a great value in AI today. And with all these core businesses that just aren't going anywhere anytime soon, it's one that I continue to add. It's one of the biggest stocks that I have in the asymmetric investing portfolio. Happy to hold on to that, potentially buy if there continues to be a pullback. But I thought there was a lot to like in the report. Maybe not any blowout numbers, but continuing to move in the right direction. And for a company this size and this valuation, double-digit growth on the top line and operating margin on the bottom and operating leverage on the bottom line is exactly what I want to see. But let me know your thoughts in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.